Okay, right. So guys, let's continue from where we stopped off in the last video. Right. So number one, over here, as you can see, right, I made a small mistake when starting off this question. Right. When I read the requirements said me to prepare an adjusted cash book. So the first thing what I should have done is copy this one. Right. Over here, guys, as you can see, right, cash at bank is 290. This 290 over here. Right. Please copy that in your adjusted cash book as balance brought forward 290. Right, so I'll continue from where I stopped in the last video. Right, it says consultancy income of 300,000 directly deposited in the bank account. Right, so remember in the revision class we have already done bank reconciliation, direct deposits. So when there is a direct deposit, number one, you have to mark this inside your adjusted cash book. Right, so first you mark over here, right, direct deposit. Right, so therefore there's a direct deposit of 300,000. Right, so you mark that one. Right, okay, so if anyone is thinking why only this set of transactions we are doing in the adjusted cash book and the bank reconciliation, if you read over here, on 31st of March 2016, the bank account balance of the partnership did not agree with the bank statement. So remember, only these four adjustments are relevant to our adjusted cash book and bank reconciliation. But these transactions can have an impact on our income statement, right? So if you see over here, a consultancy income of 300 has not been recorded, right? So point number one, please go and copy this under your consultancy income, right? So consultancy income, we have already subtracted 200 to this answer. You have to add back another 300, right? That is done. Right, then guys, second adjustment, a check of 50,000 received from Ranga's wife as a consultancy service had been deposited in the bank and not realized. So if a check is not realized, in simple terms, it is an unrealized check, right? So you go and mark that over there, right? Unrealized, so that's now going to be 50,000, right? So since we are doing it without the three zeros, I'll mark it over here 50, right? But the accountant has done a mistake. He has gone and marked this as other income, right? Now when you go to your tut over here, other income is already 100, right? So first what we'll do, we'll go and copy this under other income, right? So other income, they are telling it's going to be, right, 100. Right, but inside this 100, what they are trying to say is, right, we have received a check for consultancy service. So that means this 50,000 is a consultancy income. Accidentally, we have gone and marked this under other income, right? So what you should do, go to other income and remove this 50. This 50 is actually a consultancy income, right? So you go and add this to consultancy income, right? So that is also done. Next one, a check of 250,000 issued to external consultants have not been presented, right? So if it's not presented means, in simple terms, that is unpresented checks, right? So you go to your bank reconciliation, right, and go and mark this as unpresented check. So therefore the unpresented check is now going to be 250,000, right? That is also done. Last one, Eranga's housing installment of 50,000 has been paid by the bank as a standing order, right? So remember, any standing orders should be credited to the adjusted cash book. So you go to adjusted cash book over here, right, and you mark over there standing order 50. Right, but remember the catch over here is Eranga's housing installment, right? Now remember, this is not a business transaction, it's a personal transaction. So remember, if it's a personal transaction, you name that as drawings. A quick recap, all drawings are debited to the current account. So what you do, right, go to the current account, right, on the debit side you mark over here, either you can mark it as drawings, or guys you can even mark it as loan installment, no problem, right? So which partner has taken, it's Eranga, right? So you go and mark over here 50, right? So guys, with that one we have finished off all our adjustments over here. Right, now guys, let's start copying, but remember we still have this to be done 10% based on year end balances, right? So number one, right, consultancy income I have already taken to my income statement, as you can see over here. Right, consultancy expense, directly go and mark this guys under expenses, right? Consultancy expenses, right? So that's going to be 3500. You also mark over here 3500. Right, next one, operating expense, that is also guys an expense, right? So you mark over here operating expenses, right? So that's 1200. Right, next one, salaries paid to Eranga. Right, now guys, when you did the MCQs, I gave a specific note saying that if there is a salary in your agreement, that should come on the current account credit side. But if the same salary has been paid, then it should come to the current account on the debit side. Right, now when you go to the current account, there is already a salary on this side, that is in the agreement one. So agreement one is always credit, but from this, if anything has been paid, then you should debit to the current account, right? So you go to the current account, right? On the debit side, you mark there salary paid, right? So you go to Eranga over here and please mark over there 480. Right, loan given by Udara, guys, remember loan will come in the SOFP. We are not doing the SOFP, so that is not a problem. Right, next one, loan interest paid. So again we are having the same thing here. We calculated 8% loan interest and we got 40. So remember, any income according to the agreement should be credited to the current account. But if the same income has been paid, see the same income of 30 has been paid, then this should be debited to the current account, right? So you go to the current account, on the debit side you mark there interest paid 30, right? Sorry, 30, done. Right, next one, PPE carrying amount is not relevant. Depreciation, if you have not forgotten, we have already marked. Other income, that was also taken. Cash at bank, we took to the adjusted cash book, right? Now guys, simply copy the capital account and current account opening balances, right? So capital account opening balances are 1000 and 1000, right? So you go over here, brought forward, right? So it's 1000. Over here also it's 1000. Eranga doesn't have. Current account, both are having positive balances, so meaning it's a credit balance, right? So you mark over here again, brought forward. Ranga has 200 and Eranga has 100. Right, now guys, since I have marked now all the transactions, step number one, please close the capital account, because again we have not done this 10% based on year end balances, right? So total this up, so you will get 1900, 1900, and here you will get 1000. It's 1900 over here, 1900 over here, and 1000, right? Okay, now guys, please get your closing balances, right? So for the first person, 1080. Sorry, 1180, right? Over here also 1180, right? And guys, over here we have 640, right? Now remember, based on year end balances means it's based on your 3 carried down. So remember, 10% should now be seen on your carried down, right? So interest on capital, right? Point number 1, please go to your appropriation account. Right, so Ranga has a capital account carried down of 1080, so that one into 10%, Eranga also has a capital account of 1180, so that also into 10%. And Udara has a capital account balance of 640, so that also into 10%. Right. So guys, that will now be 118, 118 and also 64. Right. So remember, what is the double entry for interest on capital? Appropriation account is debit and current account has to be credit. Right. So go to your current account over here. Interest on capital, so it's 118, 118 and 64. Right. So guys, now we had done all the adjustments, we have marked all the transactions. Let's balance off this question. Okay, right. Okay, so guys, number one, get your new consultancy income value. Right, so that's going to be now 8,750. Right, keep it as it is. Right, now remember, I explained to you this is a service business, so therefore they won't have a cost of sales, so therefore the same answer you copy that as gross profit 8,750. Right, and then we have one other income, so that is going to be 50, so therefore when I add this and take, it will now be 8,800. Right, now guys, please add and take all your expenses over here. Right, so that will then be 6,610. Wait, let me check that one more time. Yeah, 6,610. So guys, remember, it's an expense, so therefore you subtract this one. Right, and therefore 8,800 minus 6,610 will now give you 2,190. That is going to be your net profit. Right, then guys, from your net profit, please deduct this salary. The total is 960. Right, that will then be 1,230. Right, and also guys, please deduct this interest on capital. So interest on capital total will now be, right, 300. Right, so therefore the balance over here is now going to be, right, 930. Right, okay, now guys, last part, share of profit. Right, so remember, whatever now that is remaining, sorry, right, this 930 should be, right, as it is 930. Right, now remember, whatever that's remaining between the partners should now be shared to the ratio, as you can see over here, 2:1. Right, so first person gets 2, divide the whole thing by 5. Right, so guys, second person over here also now will get 930 into 2, divide the whole thing by 5. The last person guys will now get 930 into 1, divide the whole thing by 5. Right, so you get your share of profits over here, so that's 930. Right, it will now be 372. 372 for the next person, and for the last person will now be 186. Right, so remember, share of profit also has a double entry. So what's a double entry? It will now be appropriation account debit and current account should be credit, right? So you go and credit over here, right? Share of profit 372 and 186, right? So guys, on your own, I want you to close off the current account because the capital account has already been closed off, right? Last part, how to finish off this, right? So what you do, right? Point number 1, you add these two and take, so that will now be 590, right? And then so 590 on this side, right? So therefore 590 minus this 50, so therefore the adjusted cash book carried down will now be, right, 540, right? So 540 plus 250 will now give you 790 minus the unrealized check of 50, right, will now give you 740 again. Okay, right? So guys, that we complete A level 2016 paper, right? If there are any doubts on how I did the calculation, or if you don't understand any area on how these adjustments are done, please drop me a message. I will be explaining, right? Another one video will be posted on another question in the tute, and then please complete the two questions and ask if there are any doubts over there.